Bitcoin and crypto is down. Tech stocks are plummeting.
Wall Street's very concerned that nothing's going to come out of AI and it's all just a hype cycle.
Everybody's got overly excited, thrown money at these companies.
Always very frightening to see how quick the overreaction is.
I'll share a controversial opinion with you.
I would disagree.
Yeah,
It's
unreasonable.
A lot has happened since we last spoke.
I'm very sanguine.
Really? You want to do the intros?
Why don't you do the intro?
No, you're moderating today.
Yeah.
I'm in not a
I'm
position.
kind of regretting today because, welcome back to the Unreasonable Podcast. Hey guys, it's been a while since our last episode of more than 2 months since we recorded the last time over here at Poddster. What's everyone been up to? Hian, you've had a bit of a journey.
I took an epic trip to Central Asia. I went to Kazakhstan, Almaty, Astana, and then we headed to Kyrgyzstan and ended up in a yurt camp, 3,300 feet in the sky, saw the stars. It was
Who's we?
So it was just me and my business partner and one of your friends, Vishal.
Oh,
Yeah,
okay. Why have you lost your voice?
I don't know. It must be the dusts of Kyrgyzstan or something like that.
What was the highlight of the trip?
There were so many highlights. First of all, I would say I think Central Asia is totally underrated. Not on the map of so many people, and I had no expectations going in. And it was a combination of sort of most developed tech ecosystems in Astana, followed by dance clubs in Almaty. I now know where either they got inspired for John Wick or where they actually filmed John Wick. And then, you just transition to incredible mountains, unbelievable nature. I rode a horse for the first time. I'm very good at it.
That must have been.
I'm really good at it. Yeah.
I would have loved to see that. Have you
feel
got a
bad.
video?
I have a video of it.
I'll
Yeah.
have
For
to,
the
I'll
horse.
have to look at it.
And I
Hian, how
prepared,
did you spend time in a nightclub? You sleep at 10.
Well, at about 9:45 I left. So it was quite good. I mean, they start early there. But coming back to the horse thing, I watched 2 YouTube videos and then I was like, what's so great about a horse? Oh my God, horses are incredible things. They're just right, Michael. You look like the kind of guy who rides horses.
I grew up riding horses.
Why do you have to wait so long before I ride a horse? It was incredible.
Well, you've got to pace yourself throughout your life.
But you actually ride horses?
I ride horses. Yeah.
Wow.
My mum was a professional horse rider.
Okay.
So I did not necessarily enjoy it,
Okay.
but I did it.
Did the horses enjoy it?
No.
No, your mom is a professional horse rider, and your dad was a professional pilot. Are you James Bond? But just wow, because I didn't know about this. The feeling when you sort of saddle up next to someone with a horse, and then I was like, wow, this is like.
Especially if they know what they're doing, they don't look like a sack of potatoes on the top of the horse.
Well, I'll tell you the story, right? So I go there and I've watched 2 YouTube videos. Clearly, I know how to like be one with the horse first, right? Is that what you do? And I go to this beautiful horse. I'm gonna, and then the horse guy goes, the other one, and I got like the beginner horse. And so you see, I'll show you the video. It's kind of like a big guy on a small horse. But I'm like, it's not that hard. This is great. And so we insisted in the afternoon that I get a proper horse, and then I got a proper horse, and then I realized. Yeah, it's kind of hard thing to do.
Yeah.
But I'm addicted. And when you do it on the plains of Kyrgyzstan, because we were at 10,000 feet and this thing was a lake and it's like 50 kilometers left, 50 kilometers right. And nobody else, just like 4 people and 500 horses. It was something else. So I recommend it. If you want to go to Kyrgyzstan, hit me up. I know the playbook. I got security. I got Andre, the combat medic, to help take care of us. We had the whole thing with logistics.
Yeah, just don't want to do riding horses. My kids started riding horses, then I started getting the bills.
What's been new with you?
Well, I think the big surprise that happened, I think even for me, was we had a new addition to the family. I thought 4 kids, 2 dogs was big enough household for me to deal with. And then I won't go into it. It's a long story, and I know how you guys don't like me talking for too long, but basically, we've now ended up with a British short-haired cat.
Oh, I had 2 of those. Those are great.
And then the debate, I'm not a cat person. I've got to admit, I'm a dog person. So we live at the Caribbean. So she was like, okay, I take pity on you, Michael. You can name
The cat?
the cat.
Oh.
They obviously had some
It's the first
suggestion, which is Leo, and I was like, we can't call the cat
Leo the cat?
Leo the cat.
It's not too bad.
I decided Pirate would be a good name. Pirate of the Caribbean. I thought very clever.
Okay.
The thing is, all the girls like Leo, all the boys liked Pirate. So the cat is now called Leo the Pirate.
Do you have to say that the whole time?
No, I say Pirate. The girls call him Leo.
Okay, I guess everyone wins.
But amazingly, the dogs and the cat are like best friends. They hang out, they go around, which I didn't think was possible, but that's how much I know about these things. So,
Vishal, what have you been up to?
Yeah.
Nothing as exciting as either of you guys. I was in Japan for a large part of the summer.
Yeah, I saw that.
In the heat. That was like a lot of fun. They had the largest tech conference take place in Kyoto called IVS. 10,000 people all across Japan descended on that venue. So it was great to just reconnect with a lot of different people. I don't usually go to Japan in the summer because it's bloody
muggy.
hot.
Yeah.
But this was a lot of fun.
How long
really,
was the conference
enjoyable. The conference was about 4 days, 4 or 5 days.
Oh, was there a major theme of it, or was it just a general get together?
8 different stages across a 7-floor venue. So it was massive.
That's a massive.
Massive event with literally everyone descending.
And did you share
Tokyo.
some words of wisdom, or were you?
I shared a lot of words of wisdom.
Oh, dear God.
To a packed audience, and that was like.
Oh, yeah, that's how it's a packed audience. Isn't
Packed
it?
audience, yeah.
Packed audience. I learned a lot from that conference. It was fascinating.
Vishal, you always go to like Japan for like almost like a month every year, right? Something like that.
About 2 to 3.
Tell us a story. Why'd you do that?
I started going frequently after I did a summer exchange program at the University of Tokyo when I was in law school.
Wow.
And I sort of like just fell in love with the culture and the place in a very deep and meaningful way, and just started going back every year. And the cool thing is that we have a lot of business in Japan, whether it's on the investor side, whether it's in companies, whether it's on government partnerships that we have. So there's a lot to keep me in the country, and I just enjoy being there in general, even for pleasure. I'm usually there in April and October, not usually in summer or winter. Those are my favorite times of the
Do you
year.
stay at the Park Hyatt in room 4711, like Tyler Brûlé?
I kind of do actually.
Oh,
we
I knew it.
We had a long conversation about that actually when I met him in Hong Kong. Where we have the similar fascination for that hotel. But they called all the guests back when I was there on my last trip. All their long-staying guests to the hotel when they were shutting it down for renovation. So the Park Hyatt's actually closed for the next year. So that was really, really fun to just meet everyone else.
You and Tyler, man.
Yeah, but no new additions to the family. No cats and no Kazakhs. So neither of those things.
And no kids that you're aware of.
No kids that, we're definitely cutting that part out of things. So we've got a lot has happened since we last spoke.
Yeah.
But I think what has been most proximate so far is this massive roller coaster that's been going on in the markets over this last weekend in August. And Hian, I know you have some views and perspectives that you want to share on what is happening. Bitcoin and crypto is down. Tech stocks are plummeting. What's going on in the markets, Hian?
Well, yeah. So I'm in the mountains of Kyrgyzstan, and then I come back and then I take my kids to like another sort of weekend trip with my sister, and then this thing melts down. I'm sure you can always read in the press all the different factors, but it's kind of like, first and foremost, I'd say it's something that I almost feel like it's overdue. We kind of always knew that the Fed was going to pivot, and people were playing a round of musical chairs. Always very frightening to see how quick the overreaction is. But what's an interesting comment and insight is that I certainly feel like a lot of people are really concerned that the AI so-called revolution is very similar to the hype cycles of many other things. The closest one, obviously, is Web3, right? So if you look at a lot of the news, everybody from Facebook to Amazon to Microsoft defending the billions of dollars of capex. I think Microsoft is saying that you're going to have to put in $30 billion with a very decade-long payback period. I think Wall Street's very concerned that nothing's going to come out of AI and it's all just a hype cycle. But I totally disagree with that. I think the difference in this time is you can really measure the productivity gains that happen with AI. And I agree that we're still in the rollout phase. We're still in the execution phase. Enterprise adoption is not quite there yet. So you're not really seeing the revenues in. But if you look at the efficiency gains of, people analyzed it, it's 5 times cheaper to execute a self-driving car as opposed to a car with a driver. That looks amazing, right? 5 times cheaper. But it's like 3,000 or 36,000 times cheaper if for the cost per word, if you do some sort of analysis, if you get a copywriter write a prose and then you get an AI chat GPT to do it, it's almost zero in costs. So it's like 36,000 times cheaper. So just the benefits of doing all of these kind of things, the productivity gains, the leapfrog nature of what we're doing. You're going to see a lot of hype cycle where a lot of people want to say, I think this thing is worth a lot of money. But at the end of the day, there's still going to be a shakeout. The business model is not there, but it doesn't mean that the capex that's gone in is going to be wasted.
So you're saying the main reason for this roller coaster is that there's been a loss of confidence in AI or some skepticism around it?
Big tech came in with earnings weaker than expected.
Right.
I don't think we've heard from NVIDIA just yet. The unemployment results came in weak. Now the Fed's having an emergency meeting. So this is whole confluence of, oh my God, and then everything, loss of confidence and people just selling out. But long run, I still think that AI is going to be an incredibly life-changing technology. And so I don't think this time is going to be the same as any other hype cycles. I really believe that this thing is a game changer.
So do you think that this is just a temporary dip right now that we're seeing?
No, it won't be a temporary dip per se. I mean, what do you mean by define temporary?
The sell-off that we've seen in the market over the last few days.
It's going to work itself out. It's going to be like 6 months of significant adjustment, rotation out into other things that have been neglected, other businesses. One thing I hope is that there'll be a rotation into risk assets, right? So because now you don't get a free ride for your cash, right? The yen carry trade has just unwound. You come back from Japan, right?
Yeah, that was
incredible.
my understanding that the main reason for what happened over the weekend was the carry trade more than anything else.
But it's also because everybody is just saying, it's just so fun to just put your money in cash and just see a decent return. Now, people are now seriously thinking, I've got to park it at least in bonds, or I've got to find equities, or hopefully we'll have to put it in private equity and venture capital. So like I said from the beginning, really hope that this is the beginning of the melting of the ice age, but icebergs will crash into the water and it will be noisy and maybe some penguins might get injured. You like that analogy?
Penguins are one of my favorite animals, if not my favorite animal. I have no idea what your analogy means.
Trying to make him laugh.
I still have no idea what you mean by that. But,
iceberg crash, penguin.
Yeah, penguins come in. I get that, but it's lost.
just
Hopefully,
gotta be
some of
messy.
our viewers listeners will understand what
Michael,
you mean.
what do you
Michael,
think?
do you understand what he said?
I have no clue.
Yeah, it's a bit confusing.
It's a rant again.
It's a rant,
It's a
okay.
rant again.
Yeah.
What do you think of the markets? Are you sanguine, run for the hills, or do you think?
I'm very sanguine.
Really?
Things go up, things go down. If you're looking at it from a long-term perspective, I agree with you. AI is going to have a major impact. If I'm looking at from the startup point of view of what I'm seeing now, a lot of the stuff is just a bunch of features. They're not real businesses.
Yeah.
Everybody's got overly excited, thrown money at these companies with no business models, no real clear kind of picture of how they're actually going to make any sort of decent returns. But the reality is, for this to move forward at the speed that it wants to, you need to have a lot of money put in. If you go to like the Formula One racing, they spend millions and millions, and they don't get a return from the actual racing cars, but the development that is made through Formula One, you get to see kind of...
That's a nice analogy. That's a better analogy than the penguin thing.
Much better.
Yeah.
So I think the trickle down. So you need Microsoft to spend the 30 billion for us actually in 5 years' time to actually see the benefits, and then people are going to be playing around the edges. But I don't see, in terms of the core AI functionality, is going to be delivered from a startup. I think a lot of it is going to be coming from the big tech companies. Yeah. And I think this is how they're going to cement themselves in the long term, because to build the AI models out and the infrastructure in particular out, you're going to need billions. And that's only going to be accessible to the tech companies who are making that type of money.
Well, I think that's the substrate layer. Like, coming back to Kazakhstan, there's a team in Astana who's doing a Kaz LLM, the Kazakh large language model, right? Running on a couple of H100s. And I think there's going to be now a large sort of Cambrian moment where everybody will have a large language model for specific languages, for specific use cases, as well as people trying to build like the one ring to rule them all kind of LLM, right? So you can see how if you want to optimize for medicine or something like that, You want to, run it with a specific RAG, a specific data set, try and make it into a smaller parameter model, make it more efficient. And so I think that the heterogeneity of their large language models will mean that people are underestimating the amount of GPU capacity that's needed. I've heard from some sources, it does feel like we've kind of overinvested in GPU capacity. There's a lot of GPUs which don't seem to be running at full whack, especially those dedicated to enterprise. So yeah, it's always a bit bumpy, and there is some truth to what the market is saying, that we're not seeing the revenues. But long term, I still think that people are going to find crazy use cases, and then we'll get the use cases and the revenues from the capex from the past few years.
I guess one of the good things about this particular sell down is that revenues actually have been increasing for the big tech companies.
Yeah.
They haven't been decreasing, or they haven't been steady. They've actually been going up. So at least there's some growth, despite there being a sell down. So hopefully that means that there's whatever recovery happens a little bit quicker, and it's perhaps a sort of like a conflation of many different events happening at the same time more than anything else. It does make me wonder, though, what do we think is going to be the outlook for companies looking to list, tech companies looking to list in the next 6 to 18 months? Are they going to be pushed out further? Or do you think that there's real prospect for boom in technology listings coming back into the market, as we said there was going to be at the start of this year?
As I said, it's been a long time since I was an investment banker doing these kind of things. But if memory serves me correct, there's always going to be one watershed IPO that seems to break open the market, and then investor sentiment comes back. So I think one of the first things that in Southeast Asia we're going to have to work through is a significant overhang from two listed companies, as always, Grab and Gojek. And the sad truth about it, I think, is that if you look at the results of both Grab and Gojek, they're turning profitable. Gojek has even approved a share buyback, for them to do various things. And the businesses are essentially entrenched. They've got a moat. So what you need to do is you need to have these share prices come back, say another 50%, 75%, and investors who maybe come in at this point in time make some money and there's some excitement. I don't think that view that you should buy them now because their value has really floated through. And then the first guy out is always the scariest human being, right? And you have also a lot of structural issues that I think Southeast Asia is currently working through. Most notably, the Singapore Stock Exchange is going through this wonderful sort of introspective moment. And they've now put together a committee of people to go and think about it for one whole year before some recommendations.
Are you on that committee? Can I ask?
No, I'm not on that committee. Not on that committee.
No, it was published last week that they set up a committee to look into it, to come up with a recommendation in a year.
So if you're an optimist, you would say, look, changes are being made. And I think we know some folks. We had Koh Boon Hui, who was the chairman of the SGX.
And he's on the committee.
And he's on the committee. Dilhan is on the committee, and Temasek, and a few other people there. I think what they've tried to do on the committee is to keep it very sort of governmental, and maybe the private sector people, the lawyers, the bankers, the underwriters, are supposed to work at the working level committee. I know at SVCA they're going to be at the working level committee. And then the recommendations are up. But let's see, it's I think it's a very important topic. The revitalization of the SGX is not just important for Singapore and important for Southeast Asia, but it represents a tremendous opportunity, right? This is a neutral exchange that doesn't have, say, connectivity to China, or, doesn't have, say, Indian companies need to be Indian Stock Exchange. Many different kinds of companies which are good can actually be listed on the Singapore Stock Exchange. We need to do something about it. And so until that is done, liquidity is very thin on the ground, and it's very dangerous.
So how does revitalization of the stock exchange change fundamental investor sentiment on tech, which seems to be at an all-time low right now? So I feel those two issues might be a little bit disjointed, which is the stock exchange here needs to be revitalized, but there's perhaps a deeper issue, which is investors themselves are just a little bit more circumspect about investing in technology companies. Or do you think that the two are linked?
Well, I don't think that Southeast Asia, by definition, is investing in like really, really, pure tech companies, right? Of course, you've got your strategy and stuff like that, but by and large, a lot of it's tech enabled, right? So
yes, let's
so
just
it's
talk about that whole category.
yeah,
Tech
so
enabled.
it's a company selling diapers now. It's a company selling
Right.
diapers online. So
Right.
first and foremost, these companies will essentially be very similar in its sort of growth trajectories, and it should be running on PE in the long run, right? So I think there's no difference not a bigger difference, right? If you think of it from a tech enabled perspective, but you always work backwards from your exit expectations to your entry
That's right.
expectations, right? And that part is broken. The exit bit is not happening. And we're out in the markets, you're out in the markets. Very common question from LPs is when are we getting our money back? So I think it's very intertwined.
If you look at it from an exit point of view, I think IPOs are really not where most people are going to get their exits from. I mean, if you look at the majority of markets, maybe outside of the US, but in Europe and the UK in particular, most of the exits are going to be trade sales or secondaries. It is not necessarily going to do an IPO. The IPO market is a very, very small percentage of where most VCs are exiting. So, and up until now, a lot of the times that people have been focusing on the US market to do the IPO, the problem is that outside of the top 10 companies on NASDAQ, there is not a huge amount of liquidity. So, and if you're then talking about Southeast Asia, a lot of people in America don't know much about Southeast Asia. It is, and maybe I'll get into trouble,
It's absolutely.
So for me, it's, yes, we can sort out Singapore, we can, Thailand is doing, Malaysia is pushing, everybody's pushing for it. The thing is that not many companies are, I would say, kind of IPOable. The second thing that you've got is where I think the hangover more is a lot of companies raised at ridiculously high valuations. So there's that hangover of how do you, people are much more circumspect in terms of when you're actually selling, and, VCs don't necessarily want to have to do markdown. You're not going to be able to get the same valuation that you might have got raised money at 3 years ago now in terms of either an IPO or any sort of exit.
I agree with that. Do you think that companies have now been right-sized, though? They have been markdowns, there have been down rounds. And what has also happened is, because of what we've seen happen in the public markets for Southeast Asian companies, what they've listed at and what they're trading at, there's a huge delta. Doesn't that set more realistic exit expectations that then move downwards when you invest in companies?
When I've been talking to LPs, they don't think there's been enough, a lot, especially the later stage VCs have been doing big enough haircuts on their investments.
Right.
They still feel that in other markets, they've been much
more aggressive
in terms of the write-downs and in terms of what we've been doing in Southeast Asia. That's why I still think there is still a way to go. And I do, where I get excited about, I do feel where maybe for my type of businesses, trade sales are probably more than likely people who want to get access to this market.
Let me ask you both this question then. So I agree. I've noticed this looking at our portfolio globally, that the companies that we invest in the US, the acquisitiveness is a lot higher in general. Companies start getting acquired weeks after you've invested in them, even at seed. People are buying out technology, acquiring team, and that goes all the way to even large-scale billion-dollar buyouts from of portfolio companies that we've had. But obviously, you don't see that in newer markets in different parts of the world. So perhaps a question for you both is, what are the both of you doing to encourage more of that? Or have you changed tack on how you get companies sold? Because there is a philosophy that companies are sold, not bought, and that requires an activeness on the part of the founders and investors to get those companies sold.
So one of the things that we did is we had our portfolio day a couple of months ago. And as part of that, we always have in the morning session kind of training for all our founders that we get together. And this time we actually brought in a whole bunch of experts and ex-entrepreneurs who talked about different types of exits. A lot of founders are very much focused on, we want to IPO or we want to do X or Y, but they don't know about all the options that are actually happening in the market, like management buyouts, and what they need to actually do to have these things don't happen overnight. There's got to be a plan. You've got to have some thought processes that and a lot of them, even when they talk about an IPO, they don't actually even understand what the process is and what that actually means for them. So we spend, half a day on a very high level. There's only so much you can do in a half a day, but to get them to actually start even thinking about it, and it's never too early to have an understanding of where you want to go, because there's certain decisions that you can make too early on in the business that actually might exclude you from a particular exit opportunity that you can go. So I think that's one thing that we do for it. And I think the other thing is that, so from a fund perspective, we've got some companies which are good companies, which we like, which are doing okay, but in the long run, we don't believe are going to give us the returns. So we've looked at a few of them and said, can we just get out earlier? And we've actually had a situation now with one of our portfolio companies. Actually, the other VC has offered to sell their stake to us at like very cheap, and that they have a huge portfolio. And it's just taking a lot of time to manage. They need to give some return to investors. Because if you also look at from the liquidity point of view of a lot of the VCs, again, one of the feedback, and I think we've all got it, is where Hian, you mentioned it earlier, where is the liquidity? We're not seeing any returns.
Yes.
So what I'm now seeing from a lot of VCs, they're picking their maybe top 10% of winners. They've got maybe 40% that they feel there's some type of return, there's some value there, but it's just not going to really change the needle for their fund. So they're just seeing what they can actually get to start actually showing some returns. Because if you think about it, the VC market really took off here in 2011?
Yeah. Hian, what are you doing in terms of like sales?
Well, first and foremost, I think the statistic I read many years ago, maybe it's American statistics, like 82% of companies are trade sales and 20% are IPOs, right? And that is part and parcel of what we do. And it's actually correct, because you want to join a bigger company, or you want to merge two companies together so there's a critical mass, so that becomes a much more stable synergies, big economies of scale. And we're starting to see companies which are IPOable in Southeast Asia. They've got the scale. They're actually profitable. They've got $300-400 million of revenues. I'm talking about some fintech companies. Here's the challenge. If there is no stock exchange that is the natural home of a Southeast Asian startup, that's the challenge I think we're talking about. So if you built the same $300 million fintech company in India, oh my goodness, Indian Stock Exchange, China, Chinese Stock Exchange, America, need we say no more. So what are the options for a Southeast Asian tech company? Well, we've got a few, right? A lot of them are thinking of the London Stock Exchange.
Yes.
And exactly, right?
It's
and
true.
if you're smaller, you go for the Australian Stock Exchange, right?
Sure, yeah.
And the mid-market is very good in Thailand and in Malaysia. And if we can add on the Singapore Stock Exchange, I think that's going to go a long way in creating liquidity. And as a result, then the VC, the pressures off the venture capitalists, because we get to return capital, we get to finish the job, we get to prove a decade-long enterprise, a decade-long journey. And so that's why what the committee in Singapore is doing right now, what the recommendations that come out of that committee is absolutely paramount. And then let's not even talk about the lawyers and the underwriters and all the other ancillary services that drive the financial industry of Singapore. And, we need to make sure that works as well.
But do you think that's really going to change in the next 5 years? I mean, what you're talking about in terms of...
I remember a time, sorry to interrupt, when Singapore Stock Exchange was rip hot. I mean, I IPO'd Chartered, I IPO'd Stats, Creative Technologies was $1 billion company. There were REITs. It was vibrant. I mean, people forget that the Singapore Stock Exchange was a very vibrant stock exchange.
What changed?
I think that's the problem, that it was just like a death by 1,000 cuts. And that's like, I'm even guilty of not being able to really pinpoint what changed, right? So I think there is a need for that, liquidity support, the impetus by, our pension funds need to at
Support
least
the local
support
exchanges.
I don't think we should have a mandate for it, but they should be very open to it. But
Yes.
it's really multifactorial, and someone's got to do something first.
Yes.
And it's always hard to convince the first person to do something
the
because
way-
the risk is high.
If you think about it, even in the US stock, on the US bourses or any major bourse in the world, the largest holders of stocks stocks are institutional investors, and the largest asset pool from institutional investors is coming from large
Yeah.
government pensions, other endowments, public bodies, really, right? And then a part of that is retail, but it's
But
always a
is that
smaller bit.
Is there enough of those in Singapore to actually
Yes.
make
think
it
so, for
vibrant
sure.
Okay.
enough?
I don't want to go into detail about it, but the answer is yes.
Yes.
I mean, between GIC, between Temasek, between all the private banks here, all the family offices here, the answer is absolutely.
without a doubt.
Yeah. Do we want to mandate people so that, well, maybe not, right? But do we want to make sure that the environment is so conducive that it is an attractive thing to do? Absolutely.
I'll share a controversial opinion with you. I actually think that one of the reasons why it is difficult in Singapore is because we don't have currency restrictions. Currency restrictions that we
that's true.
have in India, in Malaysia, in China, in countries like that. Like if you think about the Indian stock exchange, and the Indian ecosystem in general, it's a pressure cooker. There's a lot of domestic capital and it's not easy to get out of the country. So it has to go somewhere. And a lot of capital that was allocated to other markets in different parts of the world, especially China, at the very, very late stage. I'm not even talking about venture. I'm talking about buyout, private equity, like very large hedge funds that were investing in China, diverted capital to India. So you have to convert into rupees and invest in rupees. And getting rupees out is really hard. It paves a way for companies to be built right from the ground up, all the way till exit and to list on the bourses in India and continue to support them after that, because there's a restriction on how capital can flow in and out of the market. And I think something similar exists in Malaysia, which is why it's a pretty interesting opportunity. And you can see that exchange over there getting very vibrant.
I'll give you a very, very specific example, right? So there's a company called Poddster, which is a semiconductor chip design company. It's been around. I think like the founders are, definitely above the age of 50, real salt of
Where's
the earth.
this?
This is in Malaysia.
Okay.
Yeah. And, the founders are there and they make like, if I'm not wrong, about $20 million of revenues, $4 million of net income. So really, good company, right? And then they went IPO, right? And if you look at it's really good. If you look at the prospectus, the directors are all Malaysian and they just presented it like a good salt of the earth, Malaysian, good PE, dividend yielding stock. But then, of course, this sort of craze in semiconductors and AI, if I'm not wrong, they priced it around $70 to $80 million IPO. It popped to like $230 million.
Oh, wow.
And then it's come down, last I checked, maybe when I was in KL20 in April,
Right.
it came down like 120, 130.
Okay.
And I managed to meet the CEO.
Still not bad though.
Yeah, I managed to be CEO, and he's like, he's shell shocked. He's
Right.
like, I just wanted to list the company. Didn't expect like suddenly the edge and everybody say
Yes.
this is a big thing. But you know what happened? There are now like 4 other chip companies which have roughly like 20 million, 25
Yes.
million revenues, all queuing up to
Yes.
be just like Poddster, right?
Yes.
And then the local brokerages get involved and all that kind of stuff. You see how that actually works, and that's a very mid-market IPO thing. Maybe you're right, like the domestic market will only invest in the domestic bourse because of the currency restrictions. But on the other hand, there are companies in Singapore, grown up in Singapore. Charles and Keith should be listed
Right.
here, right?
Right.
Love Bonito, I hope one day will be listed in Singapore Stock Exchange. But the currency restriction thing, I can't really determine. What I think is missing in the world nowadays was we used to have these mid-market IPO windows. And even the world now, if you want to do a listing in the US, it's got to be like super large. And,
Yes.
and it's also a function of how you now have these crossover funds and all that kind of stuff. So it's fundamentally changed. If there's currency restrictions, maybe that helps to create this kind of mid-market pockets.
It does.
But I think Thailand and Malaysia, if I, as a venture capital fund, we want to prepare some of our companies to go, the Thai companies to go on the Thai Stock Exchange. We extracted liquidity for one of our companies on the Australian Stock Exchange. not everything has to be a mega IPO
agree.
like Grab or Gojek
I agree with
and
that.
that kind of stuff.
And I also think that the tricky bit about, and I agree, trade sales are usually the dominant way that VCs exit companies, but I also think that is definitely a very US-centric approach towards how exits happen, because you have a very vibrant and accepting environment of acquisitions. It happens all the time. It's very, very common, especially in tech ecosystems like the Bay Area or in Boston, where it is very normal and teams exist and companies have full-on capabilities built out to acquire. The tricky bit is those companies don't look the same way at firms that are outside the US. So if you're a Singapore company, it is harder for you to get acquired unless, for example, there are restrictions put on it. You got to re-domicile to the US. You got to have enough of a presence over there. Then perhaps you'll consider acquiring the company. So there are fewer businesses that have the opportunity to exit through a trade sale over here compared to other markets. So you need something to step in.
I would disagree.
It's unreasonable.
I would, for once, I would actually agree with Hian.
Tell me why. I want to learn why.
Yeah.
Why do you disagree
I think
with that?
because I grew up during the UK time of, or the early days of the UK. We had exactly the same conversation back in like 2006, 2007, 2008, where we were trying to figure out, we need to do trade sale, who's buying these companies. Now, and it just takes time. It starts small, but it takes time. And the US was like, okay, we need to get into Europe. We want to get into these new markets. Actually going in directly ourselves is too difficult. We will actually acquire companies to get access to the market.
It will happen, but it will happen at a different scale. And the difference in America is that these big acquisitions happen after companies get IPO'd, after these companies are big, right? Like if you're Uber and you now want to come back into the Southeast Asia market, you either buy Grab or you buy Gojek. So that kind of market entry thesis, I think, is still valid, but it's going to be in T plus 2 or 3 years.
So it's not happening.
Not
And
yet.
I don't disagree
But
with
what I'm
that.
saying is that we are capable of making these companies that might end up being, the thing that looks like it is in America, but we are only, T plus 10 years in the creation of the true sort of technology. And then what happens if Meituan wants to come to this market? Gojek is at a good price, Grab's at a good price. So these kind of things will happen because fundamentally, Meituan cannot come into Saudi. Well, it will be hard for them to come in without buying one of these majors. So I think it's coming. And I think these major acquisitions are coming.
My point is the behavior of acquisitions in the US, frequency, magnitude is miles apart from Southeast Asia. They rarely happen in Southeast Asia. They aren't as common. So what we need is additional avenues for liquidity. Mid-market exchanges allow you to get that liquidity. For example, they've happened in Japan. You've seen them in Australia. We see them in different parts of the world. In Southeast Asia, we build that out. At least companies have a slightly different avenue for liquidity while everything else gets built out.
Companies with venture capital backed or technology entrepreneurs have made, which are valuable. And I believe that in the years to come, they will be acquired if they want a market entry, or if they're good enough and if the markets were to open, we can IPO them so that we don't have to sell them just like the way I had to sell my company,
There are definitely
That's the
valuable
point.
assets in Southeast Asia that many founders. I'll tell you what I am seeing, and I'm sure you're seeing it as well, that is happening over here. The new wave of acquisition are coming from the Grabs, the Carousels, the Gojeks, the people
the
that
internal
have.
one, right? Yeah.
So they're buying
Yes.
companies, maybe not at the scale or size because of their own balance sheet constraints that they have. But they are starting to acquire companies and acquire technology. And I think that behavior needs to be learned. Let me ask both of you this question then. Do you think that your idea of what is venture backable has changed, given what's happening in the market with
What is venture back in the
Yes.
Southeast Asian context?
in the Southeast Asian context? Or maybe even more broadly, right? What is VC backable based on what the liquidity landscape looks like, what exit multiples look like, what an M&A ecosystem looks like? Has it changed your minds?
Michael, why did you go ahead first?
I don't. don't necessarily feel that my view has changed. I just think there's a huge disconnect between what the founders think is VC backable and what I as a VC think is VC backable. So, and there's a lot of time it's a lack of understanding. If I sit 5 founders in front of me and I ask them, what am I looking for as an investor to get out of your business? A lot of them will look at me like, you're looking to make money. I'm like, well, what type of money am I looking to make? And they're like 5, 6, 7 times the return on your investment. And I'm like, if I'm a pre-seed investor, as a minimum, the worst case scenario I want to be able to envision is a 20 times return. And even if you look at your numbers, that's not even what you're offering. Like if we just run the numbers, it's not what we're offering. So a lot of the times, the founders themselves, when they're pitching their stories, a lot of the founders that come to us, and it's a common topic. The founders are actually chasing after money, which they should never. Actually, would be bad for their company. We would never invest in them. They wouldn't want us to invest
because you're
in
not
them.
aligned in what you're looking for.
We're not
at the
aligned
end.
in terms of what they're looking to build more, maybe a good lifestyle business.
Right.
I turn down businesses which are probably more likely to make money and invest in ones which are higher risk, which are probably more likely going to lose money. But the risk
That's the game that you're in.
That's the game that I'm in.
Yet,
a lot of founders don't see that.
Well, the discipline of the firm, we always look at what we think can either be acquired or IPO'd in a sustainable way, right? Are we going to find another ride-hailing company in Indonesia? Absolutely not. But are we going to find for example, a telemedicine business, right? HelloDoc is now backed by Astra. Let's hope that will be one of the companies that IPOs. Billion plus, doesn't have to be 10 billion.
Yep.
So the returns are there, but you also want to make sure that in some ways these companies are really the next iteration of a thing that someone uses at this point of time. So from a bank to a digital bank, from commerce to e-commerce, from health to telehealth or digital health, right? And then I specialize in that really quirky subsector of semiconductors, AI, deep tech, and that kind of stuff. So that's just like a global thing. And people might buy it. And there's a lot of things we can talk about how in Singapore, there's a whole category of companies which you should invest in and then use it, punch it into the US, get FDA approval for the medical device, and then those definitely get acquired. So as a venture capitalist, I think you just have to be, for lack of a better word, mercenary. And the reason why you have to be mercenary is because people pay you to be mercenary. What has changed is you wouldn't want to invest in certain things which starting to look passé. So I hope that answers the question, because at the end of the day, it's still about
it's a good answer for
boots on the ground and really being creative about things.
Because you asked the question, like, has your view changed over the last few years?
It has. I think in a few ways, and I think it'll keep evolving as the markets evolve. The first is, especially post-correction that we've seen in the last few years, where you get a real understanding of what Southeast Asia's market size is and how investors value it, the number of investable businesses, at least I feel that people are building in Southeast Asia, has shrunk. So I think that universe is smaller because actually the market size is smaller than people think. Like if you think about Southeast Asia, people's actual purchasing power, how big the companies can get, how much competition they'll face while building their businesses, the amount of capital that they're going to require to grow it. Once you start inputting now based on what you've seen happen, what you've seen play out across hundreds of companies in Southeast Asia over the past decade, you have a more somber view of the market. I'm not saying it's not optimistic, but what I mean is that you temper the optimism with some realism for how big things can get. So I think that's one. The second is that I feel I've started to I've always been looking for non-traditional opportunities. Like I've been investing in space tech companies 10 years ago, deep tech like you guys, semicon, all of this stuff. But I think it also allows us to look at much more non-traditional venture investments. So for example, we've invested in one beverage company. I can't name it yet because it's still under embargo, and we're about to do a second one. And we would have never thought of doing
Yeah.
from a venture perspective, beverage companies. But if you start thinking about things in terms of multiples, market sizes, distribution channels, whether they can be beyond the region, global, how you get there, whether it's been done before, whether there's a room in the market, you sort of start to see opportunities that maybe you didn't think were possible before. We would have always said no to something that was like that looks like a traditional business that has no tech-enabled manufacturing or distribution, but now we've made some space in the portfolio for it to at least accommodate these businesses. And I think that as part of a larger trend, what we'll see is like these almost like PE style deals being done by VCs.
That's a
earlier
cop
on.
out. You can't say that because I was going to say that because if you're a VC, you have to have VC-like returns. If you're a VC doing PE-like things, then you're morphed. Then that's your growth fund, right? And admittedly,
that's a
Open
growth
Space
fund.
as a firm, I speak for only like the things we have. Like Jessica does, like incredibly sort of PE-driven return kind of things.
I think that there is a real opportunity to build very global businesses from Southeast Asia. But what it does require is muscle in the other countries where you want the business to go global. And we've been able to rely on our teams in different markets, whether it's in the Middle East, whether it's in Europe, whether it's in the US, to help some of the portfolio companies that we have over here going global from Southeast Asia. And it's still difficult to do, but it makes that job easier. And I think for us as VCs in general, one of the things that we can do that we may not have done in the past is encourage founders to break their own view of what their market is, and try and see beyond the country, the region, to a much more global pool of customers, and then help them get there.
That, I think, my response to that, your earlier point about the TAM in Southeast Asia is not as big as people believe in. I think actually Southeast Asia is not the only guilty party in that, right? Because we are venture capitalists working in a developed market GDP per capita, right? China is a very unique thing where it caught up really fast. And so it actually delivered almost like quasi-developed markets. Case in point, India, right? I think people underestimate the fact that India is not that big a market, right? The Bloomberg just put out an article a couple of days ago saying that the hubris and the excitement into investing into India has resulted in $45 billion startup implosion. You should really read the article. That the Indian ecosystem has burnt $45 billion. I was shocked. I mean, and it was of course because Baiju's and all these kind of things. I used to talk to Shouzi when he was running Xiaomi back in the day. You know, this is like almost like 8-9 years ago. And he said the total addressable market for handphones for Xiaomi is like 75 million people in India. So this idea that somehow Southeast Asia's TAM is smaller vis-a-vis other markets, I think people just get very excited about some other markets. And we just had all of these problems the moment you leave a deep market like America or maybe China.
I do think there's a benefit to homogeneity. So in India doesn't face the multi-country, multi-island, seas away.
It's interesting because I sometimes speak with some Indian VCs. They do face the cultural heterogeneity, right?
Of course.
Like when they roll out hair salon ecosystem is different in Hyderabad versus in Pune and that kind of stuff, right? But yes, one language theoretically, I don't know, ish, right?
But close enough.
And so then everyone thinks it's a homogenous market and they pile in and then $45 billion go up in a puff of smoke.
Yeah, it's true.
So I'm saying, right?
It's true. No, I actually think that the error that was made about Southeast Asia's market size, it was from the global pool of investors, including Southeast Asian investors, that looked at China and the US as benchmarks for what the companies could achieve in Southeast Asia. We used the wrong yardstick to benchmark the companies. And of course, it got written down to where it's supposed to be.
You know, if Grab and Gojek IPO'd at like a third of the price,
size, things would be fine.
We would have been making money at this point in time. Absolutely.
Things would be fine. I think so too.
My final comment is that, you know, on a positive note, when I was back in my Kazakhstan trip and I met the Kazakhstan startup ecosystem. Do you know, like, for them, like the Southeast Asian ecosystem is like heroes, and
It's
they
true.
look towards it, right? And only about 10 years ago, when we first started, Carousel was in the incubator at Block 71, and so we've come a long way. We shouldn't beat us up too much, but yeah, I think it's we need to keep the momentum going, because the people in Central Asia look to us. I passed my passport to a security detail at the National Bank of Kazakhstan. I said, oh, look at this one, Lee Kuan Yew, you're Singaporean. So there are other parts of the world that look up to Southeast Asia and what the ecosystem has done, is all I'm saying, and we should celebrate that.
On that note, guys, it was great to be back in the studio over here at Poddster. Phenomenal space. Looking forward to our next episode. To all our listeners, thanks for tuning in, and we'll catch you next month.